Everybody's talking about one of the most hyped IPOs in recent memory, the soon-to-be red-hot Tesla Motors, which will trade under the symbol TSLA when it comes public next week. I think Tesla will be a fabulous IPO, but I want to make sure all you home gamers understand the difference between a red-hot IPO and a red-hot stock, so that you can benefit from the initial fire without being scorched by the flames after this baby comes public. See, Tesla's an electric vehicle maker, and I think this space is all sizzle without any stage. Sell, 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 sell. This deal is a great way to make a quick buck or two, which is why I advocate trying to get in it. But long-term, Tesla is cell block material, and you're going to hear it some Thursday coming up. That's why I'm doing a very special cell block today. You get shares in the IPO, you want to sell them after the initial pop. Do not hold them for longer than that. I want you out the first day. How can I like this stock on the IPO, but not like it as a longer-term vehicle? Isn't that a little two-faced, duplicitous even? Nope. And I'll explain why. The hype factor here is overpowering. Tesla, which designs, develops, and manufactures high-performance, fully electric cars, along with electric power, the train components, the powertrain components, has a stock that's every bit as sexy as its signature. And the only vehicle in the market, the Tesla Roadster, that can go from 0 to 60 in 3.9 seconds with no tailpipe emissions. Now, look, I concede the IPO is going to be huge. Money managers are always on the hunt for a green tech story. And Tesla, which makes cool cars that don't need gasoline, that plays right into the theme. Plus, don't forget that with GM and Chrysler out of the public equity markets and Toyota still reeling under its sudden acceleration recall overhang, investors in the U.S. just don't have many ways to own an automaker. The only real play right now is Ford, and as much as we like that stock, especially the Ford Preferred, it simply doesn't have the sex appeal of a Tesla. This is a seductive IPO. People are going to hear that Tesla is the best positioned company to play the fully electric car market. How much does President Obama like that? That its roots in Silicon Valley lend its electric engineering and software expertise, that its proprietary systems integration of vehicle and electric powertrain technology give it a huge edge over any competitors. And it's got one of the hottest brands around. Let's just face it, right? I think all these things will lure people into this deal. So if you can get shares in this deal, I would take them and use the hype factor for you to turn a quick profit. But after it comes public, listen, Tesla's a sell, sell, sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing. We just want you to take it for a test drive on that IPO and then bring it right back to the lot. Why? Because beyond the hype, there's just not much going on here. Tesla still has yet to turn a profit. That'd be a $1.5 billion company with no profit. Its most recent quarter, it actually lost more money than it did the year before, $1.5 billion, losing more money than the year before. This is a company with limited visibility. And just like when you're driving, limited visibility, let's call it dangerous. Other companies are developing electric vehicles, many of which I think are better and less expensive than Tesla's Roadster.
We want to talk about the IPO of the day, and it's Tesla. Listing here at NASDAQ starting at $17 a share. Big day for CEO Elon Musk. For your company here, you expanded the offering to 13.3 million shares, and the price was higher than range. Did that surprise you a little bit?
No, actually, based on the response we got going through the roadshow, we had just an incredibly positive outcome from, I think, the smartest investors in the world. And if you look at our offering, it's not just price above the range. It's not just expanded 20%. But when people look at the list of investors that are part of this IPO, they'll be amazed at the quality and strength of the investor group in Tesla.
You talk about the people investing in this. There are a lot of people who have looked at your IPO who have told me, you know what, I'm not sure that this is a smart investment. Our own Jim Cramer yesterday said, I'm not sure that Tesla has a business plan that's going to work. It's not a smart investment. What do you say to the skeptics who look at where Tesla is, the money that you're raising, and they say, you know what, they've got a nice Roadster, but they don't have a good business plan?
Well, I think, Jim, I'd say, yeah, sure, Jim, we're no Bear Stearns, but I think we're going to do okay. Jim, I think, recommended Bear Stearns and Lehman and other things. So, frankly, it's a contraindicator. People at this point ought to be a little bit more optimistic about the future of Tesla because we've confounded the critics at every turn. So at a certain point, people have to get tired of being wrong.
But after it comes public, listen, Tesla's a sell, sell, sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing. But after it comes public, listen, Tesla's a sell, sell, sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing.